Welcome to the Radio Revenue Podcast. Today, we're embarking on a deep dive into an organization that, well, operates largely behind the scenes, but plays an absolutely critical role in keeping businesses running smoothly. Cintas Corporation. We're going to pull apart their 2025 Form 10K annual report, and not just to understand their numbers, but to truly grasp what drives their unique business model, how they consistently perform financially, and, what keeps them thriving in a competitive landscape. Our mission is to extract the most important nuggets of knowledge from this incredibly rich source so you can walk away not just well-informed, but maybe with a few surprising aha moments about a company that truly helps millions get ready for the workday.
That's precisely it. And, while an annual report like the 10K can sometimes feel like a pretty daunting stack of documents, it is, in fact, a goldmine for understanding the DNA of a major corporation. It gives you a comprehensive, sort of unvarnished look at a company's operations, its financial health, its strategic thinking, even its culture. For our listeners, it's truly a shortcut to grasping the pulse of a significant player in the broader economy. It lets you see beyond the surface, really, into the strategic decisions that drive long-term success.
Okay, so let's unpack this. Let's start with Cintas' foundational identity. You see their slogan, ready for the workday. It's emblazoned everywhere, but it's far more than just, a catchy phrase.
Yeah.
This company goes way beyond simply providing uniforms, though that's indeed where their journey began. Cintas was founded by Richard T. Farmer back in 1968, starting with uniform programs. What's fascinating, I think, is how he then acquired his family's industrial laundry business in the early 1970s. That wasn't just an expansion, it felt like a really foundational step, integrating the supply chain and service delivery in a truly strategic way.
Absolutely. That move really laid the groundwork for the significant diversification and expansion we see today.
Yeah, exactly. You could truly envision Cintas as the silent, almost indispensable partner for over 1 million businesses, predominantly here in the U.S., but also across Canada and Latin America.
Yeah.
Just ensuring they are prepared, professional, and, frankly, compliant every single day.
Absolutely. And that idea of silent partner is key because their product and service range is incredibly diverse. It's all meticulously designed to enhance customer image and ensure facilities and employees are clean, safe, and, presenting their best. When you dig into the 10K, what's genuinely fascinating is the sheer breadth of what ready for the workday actually entails for Cintas.
Right. It's more than just the shirts.
Exactly. We're talking about the obvious, like uniform, sure. But then it rapidly expands to things many businesses need, but maybe rarely think about proactively. Things like mats, mops, shop towels, comprehensive restroom cleaning services and supplies, even workplace water services for hydration. Then there's a full suite of first aid and safety products, including eye wash stations, safety training programs, and it even extends into critical infrastructure. They handle fire extinguishers, sprinkler systems, alarm testing. It's quite a list.
Oh, that's broad.
It is. And this vast array of offerings is primarily organized into two reportable operating segments. First, uniform rental and facility services. That's by far their largest segment. And second, first aid and safety services. The remainder of their business, which includes fire protection services and uniform direct sale that gets grouped under all other. This structure really reveals how Cintas has kind of cornered numerous essential, often unseen service niches. Stuff that's non-negotiable for businesses of all types and sizes just to operate with confidence and safety. It's a strategic move, really, that creates incredible stickiness with their clients.
That makes sense. Okay, now let's transition from their broad service offerings to the engine that powers it all. Their financial performance. Cintas' fiscal year 2025 results are genuinely impressive. They showcase not just growth, but substantial, consistent growth. The 10K highlights total revenue of $10.34 billion for fiscal 2025.
$10.34 billion, yeah.
And what really stands out is that this represents a strong 7.7% increase over the previous fiscal year. But get this, their organic revenue growth, so growth from existing operations, not acquisitions, was even higher at 8.0%.
That's interesting. So they're growing faster internally than through just buying other companies.
Exactly. And when we break that down by segment, their core uniform rental and facility services generated nearly $8 billion. That's a solid 6.8% increase. But look at first aid and safety services. That segment saw a remarkable jump, growing by 14.1% to over $1.2 billion.
14%, wow.
Right. Even their all other segment expanded by 7.7%. So the question is, what's truly driving this consistent revenue increase beyond just the top line numbers?
That's a crucial question because these figures aren't just about expansion. They also tell a compelling story of efficiency and strategic execution.
Mm.
The 10K points to several key growth drivers, new business acquisitions, certainly, yeah, but also a significant penetration of additional products and services into their existing customer base.
Ah, the land and expand strategy.
Precisely. It's incredibly powerful for recurring revenue businesses like this. They also implemented strategic price increases, which indicates they have some pricing power. And they saw noteworthy improvements in sales representative productivity, which they directly link to increased tenure, people staying longer, and better training.
Okay, so experience matters.
Definitely. And what's particularly telling about their operational effectiveness when we connect this to the bigger picture are the improvements in their gross margins.
Right. Profitability.
Exactly. For uniform rental and facility services, gross margin improved from 48.2% to 49.3% of revenue. Now, that might seem like a small percentage point jump, but at their scale, that's massive.
Huge difference, yeah.
And this was driven by tangible efficiency gains. Things like better energy usage, a more optimized use of their in-service inventory. Think of all those uniforms and mats constantly in circulation and overall production efficiency.
Makes sense.
And then first aid and safety services saw an even bigger leap in gross margin from 55.5% to 57.2%.
Again, pretty significant.
Yeah, influenced by favorable changes in their sales mix, smart sourcing and productivity initiatives, and also reduced energy expenses. So overall, their total operating income for the company increased to 22.8% of revenue in fiscal 2025. That's up from 21.6% in 2024.
Nice upward trend.
And on the bottom line, net income for fiscal 2025 was $1.812 billion. That's a robust 15.3% increase. Diluted earnings per share grew by 16.1% to $4.40.
Wow.
So, like you said, this isn't just about growing sales, it's about growing profitability. It's a testament to how their strategic operational improvements across all these diverse service offerings directly translate into very strong financial performance and, ultimately, shareholder value.
That's a really comprehensive picture of their financial health. Now, it begs the question, how does a company of Cintas' enormous scale consistently deliver such impressive growth and efficiency? It clearly comes down to their vast operational footprint and what the 10K really emphasizes as their very intentional approach to human capital. I mean, look at these numbers. As of May 31st, 2025, Cintas manages approximately 12,100 local delivery routes.
12,000 routes.
Just imagine the logistics behind coordinating over 12,000 daily routes. It's staggering. They operate 478 facilities, 12 distribution centers, and even run 5 manufacturing facilities. And to keep those crucial routes running, they own or lease roughly 22,900 vehicles, almost 23,000 vehicles.
That's a massive fleet.
It is. And beyond that, the report highlights their deep commitment to responsible sourcing, requiring all external suppliers to adhere to a pretty stringent vendor code of conduct. But beyond the sheer numbers of facilities and vehicles, how does this vast operational network actually function as a cohesive whole to drive their business?
It's truly remarkable, actually, and it ties directly into their focus on human capital, which is, I agree, a standout element in their 10K. They're not just talking about employees, they consistently refer to them as employee partners.
Right, I noticed that terminology.
And this philosophy really seems to permeate their operations. As of May 31st, 2025, Cintas employed approximately 48,300 employee partners globally. The report explicitly states their corporate culture is just as essential as our products and services.
That's a strong statement.
It is. And it doesn't feel like just fluffy language. It seems fundamental to their operational success. Fostering strong relationships, dedication to customers and each other, all guided by a clear code of conduct and business ethics. They invest heavily in attracting, retaining, and developing diverse talent through numerous training opportunities, everything from traditional classroom settings and hands-on practical training to cutting-edge e-learning. They also have mentoring programs and employee partner business resource groups.
Okay, so investing in their people. But what about safety? With that many routes, vehicles, facilities?
Great question, and they address it head on. They have an ambitious aspiration to achieve 0 workplace injuries and collisions.
0. That's ambitious.
Very. And they've implemented a comprehensive occupational health and safety management system modeled after OSHA standards, that's the Occupational Safety and Health Administration, and also ISO 45001 standards, which are international benchmarks. And the results are pretty astounding. They've reduced their recordable injury rate by over 80% since 2008.
80% reduction. That's incredible.
It really is. And they boast 140 OSHA VPP Star sites.
VPP Star, what does that signify?
So VPP stands for Voluntary Protection Programs, and a STAR designation is OSHA's highest level of recognition for exemplary safety and health management systems. To have 140 of these sites is truly exceptional. The report notes it's more than triple any other U.S. company.
Wow.
So this deep commitment to employee partner well-being isn't just, good corporate citizenship. It's a powerful driver for operational excellence. It reduces costs from injuries and downtime, improves morale, and ultimately contributes directly to their long-term business success. It's like an often overlooked secret weapon when you're analyzing a company's performance.
That deep dive into their human capital strategy really highlights a competitive advantage that isn't immediately obvious when you just look at a balance sheet. I agree. However, even with such strong performance and a robust operational model, no company is immune to challenges. Okay?
Absolutely not.
And Cintas' 10K is pretty transparent, outlining various risk factors that they meticulously monitor. These include broad negative global economic factors, like the inflation and rising labor or interest costs we've all been feeling.
Sure, macroeconomic stuff.
Yeah. They also face intense competition across their highly localized markets and logistical challenges like potential difficulties in, say, expanding their operational facilities. And their strategic acquisition growth, while successful, also comes with inherent risks.
What about external vulnerabilities like supply chain or IT?
That's right, and the 10K details several of those too. They highlight the challenges of relying on a wide network of suppliers, including the impact of tariffs, which obviously squeeze margins. And crucially, they emphasize the critical importance of their information technology systems, which makes sense for a company this complex.
Yeah, IT is backbone these days. How about cybersecurity? That's always a huge concern. It is. And the 10K reveals Cintas has a robust cross-departmental approach. It's led by a Chief Information Security Officer, a CISO, with over 25 years of experience. They leverage industry standards like the NIST CSF 2.0 framework, that's the National Institute of Standards and Technology's cybersecurity framework. It's a widely adopted best practice guide.
Okay, so they're following recognized standards.
Yes. Plus, regular employee training, layered defenses, and they engage independent third parties for risk assessments, cyber maturity checks, and even penetration testing. And while the report does note they have experienced past cybersecurity incidents, which is pretty common these days, crucially, none have had a material adverse effect.
That's good to hear. Speaks to their resilience.
It does. It speaks volumes about their resilience and proactive approach. And this transparency about risks, even those they've effectively mitigated, brings us to how Cintas maintains such a strong financial footing amidst these ever-present challenges. Their liquidity and capital management are absolutely key to their resilience.
That's a critical point. How do they ensure that financial stability, especially when navigating these very real risks you've outlined?
Well, their approach seems very disciplined. They reported net cash provided by operating activities of $2.166 billion for fiscal 2025. That cash flow from operations has historically been a significant and consistent source of their liquidity, proving the power of that recurring revenue model we talked about.
Strong cash flow is king.
Always. And they anticipate having more than sufficient liquidity for the foreseeable future, which is a strong signal of confidence from management. In terms of debt management, Cintas has access to a $2 billion revolving credit facility, basically a large line of credit they can tap into if needed, and they maintain very favorable credit ratings, A from Standard & Poor's and A3 from Moody's Investor Service, both solid investment grade.
So good access to capital if they need it.
Exactly. But what's truly impressive here is that as of May 31st, 2025, they had no commercial paper outstanding and no borrowings on that $2 billion revolving credit facility.
Wow, so they weren't drawing on their credit line at all.
Nope. This indicates a remarkably healthy balance sheet and strong cash generation. It allows them to self-fund much of their operations and growth. They also strategically manage their debt. For instance, the report mentions they paid off $450 million in maturing senior notes in April and May 2025, but they simultaneously issued $400 million in new senior notes in May 2025, so active and prudent capital management there.
Refinancing and managing the profile. Okay.
Right. And for you, the shareholder or potential shareholder, Cintas declared total dividends of $1.56 per share in fiscal 2025. That's a nice increase from $1.35 in 2024.
Growing the dividend, Always popular.
Indeed. They also have ongoing share buyback programs. Two active $1.0 billion programs were authorized in 2022 and 2024. This consistent return to shareholders, coupled with active share repurchases, reflects significant confidence from the company in their future cash flows and continued growth.
Yeah, buyback signal confidence.
Definitely. And the performance graph within the 10K itself is quite revealing. It shows Cintas Corporation's common stock significantly outperforming both the S&P 500 and a selected peer group over the 5-year period ending May 31st, 2025.
Outperforming the market and its peers.
Significantly. This isn't just a slight beat, it demonstrates substantial shareholder return driven by their consistent financial performance and that strategic management we've been discussing. Understanding a company's meticulous risk mitigation strategies and solid financial management like this, it truly provides a powerful insight into its long-term outlook and its robust ability to weather various economic shifts.
So wrapping this up, what does this all really mean for us? Our deep dive into Cintas Corporation's 2025 10K reveals a company that isn't just growing its revenue. They are doing so with remarkable efficiency, supported by a vast, incredibly disciplined operational backbone, a really profound commitment to their employee partners, and a robust, transparent approach to risk management. They truly seem to embody that phrase, ready for the workday, not just for their countless clients, but, for their own continued quiet success as an economic powerhouse.
Indeed. I think the ultimate takeaway here for you, the listener, is to consider how essential these behind-the-scenes companies like Cintas are to the seamless functioning and overall resilience of the entire economy. Their steady, profitable growth in providing what might seem like, ordinary services, uniforms, mats, first aid, it actually underscores their absolutely critical role. Often unnoticed, but always vital in keeping countless businesses operational and thriving. It's a powerful, tangible example of how consistent, disciplined execution in what might appear to be unglamorous services can lead to truly extraordinary financial results and enduring stability. It kind of makes you think about how many other invisible companies are out there quietly underpinning our daily lives, doesn't it?
It really does. A fascinating look under the hood. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.